What lies ahead for the economy. Here now with a financial outlook for the 2026 is President and CEO of Wilsey Asset Management, Brent Wilsey. Brent, good morning. Good to see you.
Good to be here.
Brand new year.
Brand new year, 2026.
Is it going to be a good one financially?
Well, 2025 was a good year. Most everybody did well on things, except probably residential real estate didn't do so well. Bitcoin didn't do well last year. But I think this year we should do pretty well again. But you got to be careful what you're going to do, and you have to understand what can drive the good and the bad. And the first thing we got to look at is inflation. I mean, that can destroy everything. If you've got high runaway inflation, that's going to cause higher interest rates, cause the markets to drop. So inflation right now at this point looks like it's going to be in a tamed area, probably 2 to maybe 3%. We do have, the tariffs are still there, but they're not inflationary. They were last year.
We hear inflation all the time. What exactly causes inflation?
What causes inflation is many times a factor can be like energy. If energy goes up, well, that's going to cost more because it costs more to fill your car. It costs more for transportation. Oil is in so many different things. It's in plastic, chemicals. So that causes inflation because that one commodity goes up, then everything else goes up on top of that. So inflation is just the increasing price of goods because of some reason caused that. Could be a shortage of supply and a high demand can also cause inflation. So many things can factor it. So you want to keep it low because inflation can really destroy the economy. And as I was saying, we've got a pretty good setup going into this year. The tariff should not be a problem. We don't see any major things coming out of left field. That could be a problem, which you could never really tell for sure. So energy is a big one. We just saw what's going on with Venezuela. That could be a big positive. Because with that situation, people don't know this, but Venezuela has about about 20% of the global oil supply. Now they're only pumping less than 1 million barrels a day. We're using 100 million barrels per day, but theirs will last, and it's 4 times the supply we have here. So that could be a big factor. If we can get Venezuela up to pumping oil, that could keep oil prices low, maybe in the low 50s. That's very good for people. I mean, you go to the gas pump now, not so much here in San Diego.
Yeah, but Venezuela's shipping it to Russia and China, and if they increase production and get it on the global market, that could really drive prices.
That could really drive prices. And again, they're only pumping less than 1 million barrels a day. That could increase to 5, 6 million barrels a day. That would really help the world market. Wow. No matter where it's being shipped, the world demand will change and world supply will change. So that's a big positive, and that can really help inflation because things will cost less.
Okay, people are looking forward to May when the Fed chairman is timed out and interest rates might be coming down. In fact, they likely will, right?
They will. In the short term, they will. Right now, the rate's about 3.5 to 3.75. We probably see 2 cuts coming up this year in 2026. I can't believe it's 2026. I almost said next year again. But we should see around 3 to 3.25. That should be positive because, again, that costs less for goods. There's about $15 trillion in short-term loans, which are your credit cards, your automobile cars. I mean, all these different things. I mean, so that's really going to help the economy quite a bit on the short-term rate. But again, I want to explain to people that does not help your mortgage rates because mortgage rates are based on long-term rates, which are based on 10-year treasury. I do keep telling people I have a concern on that because there's a lot of demand out there in the private market and public market for debt. And the bigger the demand, well, the shorter supply, you got to raise rates to get people to take up that demand. So,
okay, we talked about oil. Energy, though, overall?
Overall, energy is looking pretty good. I mean, I think we'll see some good things there with natural gas. Again, right now, the national average, I think, for gas, about $2.85 a gallon, which is very good. Yeah, we don't get that here.
Sorry, I didn't mean to laugh out loud at that one. We live in California.
There was over my house on Rancho Bernardo Road, there was a gas station, $3.99 for regular on cash.
Wow.
So if you shop around, the average is like $4.50. If you shop around, you get a better price.
Okay, how about job market?
Job market should be stable. We do have a lot of money supposedly coming into the country this year. We should see more jobs coming on. But I will warn people, I mean, going to college right now is not the best thing because those aren't where the jobs are. A lot of those jobs on the entry level are being replaced by AI. So your trade jobs, your jobs where, plumbers, electricians, maintenance, these are the jobs that we need people in. So these are good jobs to have, and they should grow as we're building more factories and more things going forward.
How about investments?
Investments, we see the stock market should do well based on what we see as far as interest rates staying low, inflation staying low. There was a prediction that there could be a 30% drop in the market based on options, about a 10% chance of that happening. I don't think that's going to happen. I do continue to worry about the AI, the technology. They're just so expensive, way above the average, and nothing can stay above the average for very long. This could be the year that we see those tech companies pull back a little bit. But overall, I think the market, there's some great buys in the market in financials and industrials, food companies looking pretty good. So there's things you can get into that would do very well. I probably wouldn't be so hot on the bond market, because the bond market, you know, we could see rates stay at best the same, maybe go up to the 5% level on the 10-year Treasury. That could be a problem.
Okay, and lastly, gold and silver.
Gold and silver, well, they did very well in 2025. I think a lot was from what they call FOMO, fear of missing out. I tell people, no one knows, I don't care who they are, no one knows what the price of gold or silver is going to be down the road. It's a piece of metal. And it could be at 6,000 in the year, be at 2,000. If you look back at the history of gold and silver, you will see a lot of volatility. It can spike way up, and gosh, in the next year you lose 30%. So I'd love to tell people it's going higher, it's going lower. I don't know. No one knows. The only thing I tell people, if you've got a big portion of it, you may want to take some money off the table, take some profits, be careful. If it goes up, congratulations. If it goes down, you've protected yourself.
Yeah. All right, Brent Wilsey Asset Management. Right. Here's to a good 2026.
We're going to have a great 2026, I believe.
All right, good. That's optimism. Good. All right.